Bitcoin obviously was the big winner of the year. I think I underestimated how quickly risk on would come back into play. I think also the spot ETF news was a big boon for it in terms of getting people to believe in this narrative that Bitcoin is going to just keep going and going. I'm in the camp now. I thought Bitcoin could potentially go as low as 10,000 in a worst case scenario. Now I'm in the camp where the only way that happens is if we see the stock market collapse 50+%, where it would cause a massive risk off event. And then that could maybe bring Bitcoin to 10. Otherwise, I think, again, you're looking at 25, 20K as the best case scenario on a pullback on Bitcoin.
Year to date, Bitcoin, the leading digital currency by market cap, has witnessed a staggering increase of over 100%, sparking curiosity about the duration of its upward trajectory. Gareth Soloway, the head market strategist at InTheMoneyStocks.com, reflects on his predictions made in 2023 and provides his perspective on what lies ahead in 2024. As we delve into the transformative year of 2024 for Bitcoin, several pivotal events are set to reshape the landscape of cryptocurrency. The anticipated approval of a Bitcoin exchange-traded fund, a potential rate cut, and the much-awaited Bitcoin halving are among the key developments. Bitcoin price rally to $45,000 is likely with the recent updates in spot Bitcoin ETF applications. The anticipation surrounding spot Bitcoin ETF has increased as BlackRock amended its application, filing a registration statement ahead of the new product offering. According to Soloway's insights, the rush into Bitcoin could be due to anticipation for the spot ETF and halving, possibly followed by a sell-off. This cyclic movement might see a gradual upward trend in the long run. Following the recent bullish market conditions, there is fear, uncertainty, and doubts around Bitcoin's upcoming halving scheduled for April 2024. Historically, Bitcoin halving events have supported prices. Bloomberg suggests Bitcoin could surpass $50,000 by 2024, attributing this to the upcoming halving and an expected increase of at least 81% in its value. Soloway suggests an exciting pattern around Bitcoin's halving. Typically, there's a surge in its value leading up to the event, followed by a decline afterward. Now, let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
It may sound like a broken record, but I still think that Bitcoin at these levels has upside to maybe around 50,000, 48,000. That would coincide with the spot ETF approval. My feeling on that is that everyone's front running this news, meaning that everyone's piling in for the news, which means it could be a sell the news event. I'm in the camp that I do think that we do see a recession in 2024, and we also see inflation still sticking around 3%, maybe 2.8, maybe 3.1, but somewhere around there, which again is going to make the expectations for all these rate cuts very, very tricky, especially if we have a recession, because again, it's all about, can the Fed cut rates enough to stimulate without causing inflation to surge back? And with all the money, and again, this is pretty incredible, but when COVID occurred, the money supply in the U.S. went up 40%. 40% increase in money supply. And we've only subtracted a small portion of that out via Fed tightening. And so there's still a lot of money in the system, but if that ever does kind of get taken out, then you do have the recipe for major downside on some of these stocks. So in general, halvings do have an impact, but interestingly enough, there's usually a run up into the halving and then it's a sell-off right after. The halving does make supply a little less easy to come by, which is why it generally will drive price up over time. But to me, it would be the equivalent of like, that's the fundamentals of Bitcoin. Now, fundamentals are important over the long term, meaning over the next 5 years, 10 years, 15 years. But in the short term, emotion rules. And so, again, if you start to see other factors coming in, bearish sentiment, fear about asset bubbles and collapses, that will rule the day. And I think for more than anything, if you look at past halvings, there's usually a sell-off after, and then eventually it climbs back up and slowly kind of the fundamentals take over. So for me, at least, I think, again, people are piling in partially for the spot ETF, but also for the halving. And then my guess is there's a sell-off after that, which will then slowly kind of grind back up.
Gareth Soloway commented on the recent shift in Federal Reserve policy, noting Jerome Powell's unexpectedly dovish stance. The year ends with a significant level of optimism among investors, focusing on an expected string of rate cuts from the Fed and an estimated economic soft landing. The Federal Reserve is willing to cut rates even if the U.S. economy doesn't dip into a recession in 2024, Chair Jerome Powell said. U.S. inflation has plummeted from a peak of just over 9% to 3.2% over the last year as the supply chain returns to normal following the shock of COVID lockdowns and unprecedented government stimulus. For investors hoping that rate cuts come soon, Charles Schwab warns in its 2024 U.S. Outlook that they should be careful what they wish for. Despite the Fed's dovish stance, Soloway raised concerns about the lingering 3 to 3.5% inflation coupled with record stock market highs, drawing parallels to past inflationary periods like the 70s. These signs, he suggested, could create a reckoning point for the markets in 2024. We've got a few clips from the interview. Let's focus on those.
I do think that, Jerome Powell was really clear. In fact, surprisingly dovish. I think it caught everyone off guard. We saw the reaction in gold, silver, even Bitcoin, and obviously stocks, dramatic move up in stocks. But I think there's two avenues to look at here. Number one is he's trying to front run the elections, meaning that he has to be careful to not get too involved with interest rate policy once we're within 3 or 4 months of the election. So if he's going to do stuff and talk about stuff and prepare the market, he has to do it in the first half of the year of 2024. Number two is, the question I would say is he seeing something in the economy that has him concerned where he had to pivot faster to being more dovish than otherwise we would have expected? And then the last thing I would say too is that, Janet Yellen has been very vocal, very unusually vocal. You almost feel like you have two Federal Reserve chairmen out here, Janet Yellen and Jerome Powell. And we know that the U.S. has about $34 trillion of debt, and $7+ trillion of that is rolling over in the next year. And so if you think about it, is there some pressure being applied to say, hey, listen, we need to get rates down for 2024 from 5% where they were, because this debt will have to be refinanced essentially. And we can't, as a country, we cannot be paying 5% or more on this debt. It has to be lower or we're going to go bankrupt very, very quickly. So there's a lot of different angles here that, who knows which one it is, or maybe it's a combination of all of them. But I do think that the Fed is going to try to be more dovish. My bigger question, though, is, here you have a dovish Fed and CPI is still 3 to 3.5%. There's 3.5% inflation out there. With the stock market at or close, or some in this case of the Dow hitting new all-time highs, does this create another uptick in inflation, which we kind of saw in the 70s? And that, again, is something that the markets will have to come to the reckoning point of in some point in 2024. So there's a lot of kind of flashing signs out there that people still have to be careful of. But I'll be the first to admit that the markets overall, Bitcoin included, were very, very strong this year. And I think I underestimated the amount of money that was still in the system from COVID. Sloshing around in there. Yes, the Fed tightened, but it certainly didn't tighten enough for the markets to see the drops that I thought were going to come.
Despite the short-term uncertainties and potential economic downturn, the long-term outlook for Bitcoin remains bullish. The confluence of regulatory acceptance, increased corporate adoption, and the halving event all contribute to a positive long-term trajectory for Bitcoin. This concludes our discussion for today. What is your stance? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.